The Australian economy has so far proven to be a safe haven for 2012, but some economists believe that this safe haven status may not last forever. One such economist is Fabrizio Quirighetti from Banque Syz Co, who's here today to discuss this with me further. Fabrizio, thank you very much for joining us today. Before we move on to what's wrong or could go wrong with the Australian economy, talk me firstly through the positive economic factors and what has led it to become this safe haven.
There are many reasons. The first one started in the 90s because of a debt crisis in Australia. The government took a lot of structural measures in order to promote growth. And then we had also positive development linked with the Chinese economy. You know that the Australian economy is very tied to the Chinese economy. And then you had a kind of uninterrupted growth in house prices, which helped fuel the domestic demand, especially the consumer expenditure. On top of that, the Australian equity market was not at all impacted by the TMT bubble at the end of the 90s, beginning of the 2000s, and the Australian bank were not involved in the subprime. So the result was 20 years of economic expansion without any recession, which is quite rare for developed economies.
You mentioned there housing. Housing prices in Australia have risen faster than in Britain or the US, suggestive of a housing bubble. The Economist has even referred to Australia's home as being the most overvalued. Do you foresee this housing bubble bursting anytime soon?
It's very, like usual with bubble, it's very difficult to time exactly the day or the exact date at which it will burst. However, it's clearly in overvalued territories. If you look at the prices compared to the rent, it's very high, and so it suggests that there are some overeating problems. Even if you look at the price that you pay compared to the salary, you should know that in Geneva, house prices are very high, but in terms of how many years of work you have to work to pay for the houses, it's much higher in Australia than, for example, in Geneva. We estimate that is above 15 years of median salary in Australia, which is slightly lower than that in Geneva. So for this reason, we think that clearly the Australia housing market is in overvalued territory, and it poses a great risk to the banking system in Australia.
As you mentioned earlier, Australia has always profited from its close relationship with China. However, with poor Chinese GDP data this week and the RBA meeting yesterday further emphasising Australia's reliance on Chinese growth, talk us through what a Chinese slowdown could mean for the Australian economy.
The first impact clearly will be on the Australian exports. You know that China needs a lot of raw materials, especially base metals and even some food, and Australia is clearly, because of its proximity, the key exporter to China. That is I would say a logical and natural impact on the Australian economy. More viciously, because it's very difficult to hedge against China, Australia could become the logical victim of financial turmoil, in the sense that if you are an equity manager, if you have a bonds portfolio manager, forex trader, as it is very difficult to short Chinese assets because you have not access to the Chinese market, or very difficult access to Chinese market, the people will tend to protect their portfolio by shorting Australian assets, because it is the closest linked or the closest proxy to the Chinese demand. And that could pose also a risk to the Australian economy.
So if, as we've discussed at present, the Australian economy remains protected and remains secure, then where is the weak link?
The weak link is clearly the banking system in Australia. Why? Because they are very linked to the domestic economy, and they are the main provider of the financing of this housing overvaluation. and at the same time, they need the financing of this Australian bank is external, is not financed by the Australian housing. It's financed by foreign investors. Just look at the Swiss bond market and you will see that every week, every 2 weeks, you have an Australian bank coming in the Swiss franc market in order to get some financing that will then serve to finance the domestic Australian economy. And so it means that if you have a problem on the financial market and you have something like 2008 when you have a freeze in the credit market and people start to be concerned or be worried about the Australian economy and so the Australian banks, then the financing of this bank will be put in danger, and so it will create a big problem for the Australian economy.
Fabrizio, thank you very much.
Thanks.
Fabrizio Quirighetti there from Banque Syz Co. We'll be back shortly with more exclusive interviews and the latest from the Geneva Forex event. Goodbye for now.